If you trade Forex, you know the carry trade. It seems like an easy profit, earning interest from the gap between currency rates. But after the recent Black Monday, it's a wake-up call, proving that if it were really that simple, it's just not real, man. And as for carry trade being easy money, how did it end up wiping out the global market and turning everything red? Let me break it down for you. Cue Money Monster. You can support us through this QR code right here. Boom, thank you so much. But if you're not able to support, that's totally fine too. Seriously, just you all coming to watch, hit like, sharing, and subscribing, wow, it really lifts my spirits and means a lot. Now let's get back to the topic. So about carry trade, just how intense do you think the yen carry trade is? People think it's an easy way to make sweet profits, right? But from around 1980 something up until now, it's been like over 20. If you're around 20 years old now, you're probably used to hearing that Japan always keeps its interest rates low, hovering around zero, and it doesn't seem like that's going to change anytime soon, especially when the Fed raised its policy rate to over 5%. Wow, it was intense. Money just poured in, with people borrowing yen and investing it elsewhere, doing the yen carry trade on a massive scale. Honestly, the yen carry trade runs really deep and has spread into every asset class around the world. That's why it's had such a huge impact globally. Plus, there's another point. Suddenly, the yen started to depreciate over the past year, not counting the recent brief strengthening. Who would have thought that Japan, with its booming economy, selling products well, and exporting successfully, would be in this situation? It's not just because Japan's economy is strong or because they can produce quality goods at reasonable prices. A big part of it is also because the yen has weakened. That's why, over the past few years, Japan has been able to export and sell products overseas really well. But when people say Japan is selling well, it's not because the economy is strong. It's because the yen has depreciated. This isn't just my opinion. Kevin Tredeja from UBS said it himself. Let's hear it for him. Cheers, Geob, Ting, Markles, Amsel, Strong. Need the last two, you spec top. There's a sound. I spin. Very fair week. The thing that's been burning through the yen and causing it to weaken this much is the yen carry trade. It's definitely related, and it starts with greed. Let me briefly explain how a carry trade works. It's basically speculating on interest rate differences. With the yen, rates stay near zero, maybe minus 0.1 or just 0.1. It's been this way for a long time. They raised rates in 2007, but they dropped back to zero for ages. After 8 years of negative rates, it hit 0.25, and the timing was just right. 2, the United States raised its policy interest rate all the way up to 5%, even as high as 5.25%. So if anyone wants to profit from this difference, like Japan's interest rate is at 0%, right? The US is offering over 5%. So you just borrow money from Japan and then buy assets in the US. If you buy US government bonds, you get that interest rate gap. The difference is more than 5%. Pretty interesting, right? That profit from the gap is it's basically free money. You don't have to invest anything, just borrow and pocket the profit from the gap. So I decided to call this the carry trade, sweet cat profit, because it seems so easy. But let's take a look at just how big the yen carry trade really is and how it can shake up the global markets. According to data from the Bank of International Settlements, or BIS, as of March 2024, the amount of capital in carry trades, specifically the USA-Japan, altogether, that's 328 trillion yen, or about 2.2 trillion US dollars. That's a massive amount. To put it in perspective, that's enough to wipe out the economies of nearly 5 Thailands. This has been a huge deal for a long time. People have been doing yen carry trades since the 80s, but it really skyrocketed, jumping by 52% in 2000. In 2022, when the Fed raised interest rates, the policy at that time, it was just one move. Interest rates shot up sharply by $742 billion, or 52%. You can see it clearly from this graph. It shows that the increase started right here, at the point when it became known that the Fed was raising interest rates. Make a note of this spot. This is the beginning of the decline of the yen carry trade, because the yen that came in was borrowed yen used to buy assets. This figure here shows the amount of loans involved in the carry trade, and it tells you, but yeah, that's not all. This number here is 157 trillion yen, or about 1 trillion US dollars. See, now do you get why people are so obsessed with following the news about whether the Fed will raise or lower interest rates, or which country will change their rates? It's because of these currency pair trades. So as I was saying, the way to make a profit is when the interest rate gap is really wide, right? That's why when the BOJ, or the Bank of Japan, announced an interest rate hike, Japan's first policy rate increase in years, after 20 years, they raised it from 0 to 0.25%. That's a huge deal because the profit gap gets smaller. Going from 0 to 0.25, the gap shrinks a bit, right? And it just so happened to coincide with Jerome Powell coming out and hinting that, hey, the Fed might actually cut interest rates too. JP Morgan and Goldman Sachs have both said that the Fed might cut by 25 or even 50 basis points. Some analysts are even saying there could be 3 rate cuts, bang, 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 all within this year, dropping by as much as 1.25%. Whoa, if that happens, the profit gap for cash yen carry trades will shrink to almost nothing, right? And it's not just that the profit gap gets tiny, there's also the risk of currency losses. Because as soon as the yen announced a policy rate hike, the yen immediately strengthened. It had been really weak, around 160 yen to $1, but then it became a little over 140 yen, like 147 yen to the dollar. Whoa, that's a huge drop, from 160 down to about 147. So if anyone is holding a yen carry trade position, they're not only losing out on the profit gap, but also taking a hit from currency losses. That's why there's been a massive rush to close positions everywhere, across the country and around the world, leading to a global Black Monday, with markets in the red everywhere. And honestly, you don't even have to wait until September for the Fed to actually cut rates for these carry trade losses to happen. I feel like these assets are even more jumpy than investors when it comes to reacting to news. For example, take the 10-year US government bonds. As soon as they get wind of any news, they just drop. The yield on the 10-year US Treasury bond fell like it was in a free-fall elevator. Just in one day, it dropped to 3.758%. So if anyone borrowed money to do a yen carry trade with 10-year US Treasuries, they're really bleeding right now. It's tough. If you can't cut your losses in time, you'll end up clashing with everyone else. Like I said, carry trades aren't just about government bonds. Greedy people don't just borrow yen to get a 5% yield from government bonds. If they put that money into a fund, they might get 10%. If they buy individual stocks, maybe 15 or 20%. And if they go into cryptocurrency, they could get returns in the hundreds of percent. So for example, look at the US stock market, which has been hit hard. It's really obvious. Take the NASDAQ, for instance. There was a sell-off of $6.4 trillion. I'm not saying that's only because of the yen carry trade. AI bubbles played a part too. But still, the yen carry trade definitely helped fuel it. Investors who used yen to invest started panic selling and rushed to bring their yen back home. H&P dropped, NASDAQ dropped, Nikkei dropped. On that day, Nikkei fell by 7%. UBS even said that right now, even though Japanese stocks have already fallen a lot, don't try to catch the bottom yet because they could drop even further. Trying to buy Japanese stocks right now is like reaching out to catch a falling knife. Previously, the governor of the BOJ, the Bank of Japan, had said after raising interest rates to 0.25% that they might raise them again to 0.5%, or that their target was 1%. But after this Black Monday event, which was triggered by the yen carry trade, the BOJ governor completely flipped the script, like a diver doing a triple somersault before changing direction. He just dove right into the water. No more rate hikes, this is enough. Honestly, no one really dares to push things so far that the yen carry trade completely collapses. It's not going to be easy money anymore. From now on, it's going to be a bitter pill to swallow. And most importantly, I think Japan itself doesn't want to take on the role of being the center of a new global financial crisis triggered by the yen carry trade.